Hello and welcome to Compass Global Markets weekly video update, the first one for 2018. I'm Tony Boyajian. Buy the rumour, sell the fact. We've said it time and time again, and that's what's eventuated this global equity market sell-off that we saw overnight, or for the past 2 days in fact, has investors now on high alert. So we saw the US share market close down 1,175 points, or almost 5%, and European share markets have also fallen for the 6th consecutive day. Now this stronger global economic growth outlook in Europe and the US in particular has got the market concerned about the result of higher interest rates. Now meanwhile, on Friday night we saw US jobs outlook, jobs report come out, and it was quite robust. It was a net increase of 176,000, 200,000 new jobs created, but the previous figure was revised down 24,000 over the past 2 months. Now we expect the US unemployment rate to improve or fall towards 3.8% over the next few months as the US economy moves into that full employment regime. Markets now anticipating 3 US rate hikes from the Federal Reserve in March, June and September this year, in anticipation of rising inflation, which should take the US Federal Funds Reserve towards that 2.125% level. We've seen huge asset price inflation globally, but we haven't seen much consumer price inflation, and that remains the real risk there going forward. Similarly, the risk-off theme continues in Australia. We've seen this interest rate differential between Australia and the US dollar prevail. It's narrowed. It's making the Australian dollar less competitive, if you like, and less attractive for investment purposes. Now in breaking news, we've just seen some figures come out in Australia. Retail sales figures for the month of December fell by 0.5% following November's rise of 1.2%. And international trade numbers just come out, show that the trade balance for the month of December is now in deficit of 1,358 million, whereas the previous 2 numbers were in surplus. We've seen the Aussie-US exchange rate fall by 3% over the past week alone, and the focus is now on the Reserve Bank's statement on monetary policy, which will come out on Friday. It'll be their first official statement for 2018. We expect the RBA to remain on hold, completely sidelined for the rest of 2018. We expect official interest rates to stay on hold at 1.5%, and the Aussie-US is likely to weaken further by the end of 2018. Our target rate remains unchanged at 73 US cents. Now the 3 key headwinds facing the Australian dollar this year remain intact. They are the deceleration in Chinese economic growth, falling commodity prices, especially in iron ore, and thirdly, certainly the widening interest rate differentials between Australia and the US. Thanks for watching. Have a great week. Tony Boyajian, Compass Global Markets.